The S&P 500 currently on track to wipe out losses for the year. We are now higher for 2025. But what do the market technicals signal about the health of this rebound? Joining us now, we've got Jeff Buchbinder, LPL Financial's chief equity strategist. Jeff, a great time to talk to a technicals person. I really appreciate you being on with us here because I want to know what everyone wants to know. Is this year-to-date now gain on the stock market going to hold?
Yeah, well, thanks for having me on, first of all. I do fundamentals and technicals, so I'll get that out there first. There are some very positive technical signs here. For one, that massive move yesterday, certainly, we saw about 90% of stocks above their 20-day averages on the S&P 500, very positive technical signal. And of course, which everybody's talking about, we are above the 200-day on the S&P 500. So generally speaking, that's a positive signal, especially if you're coming off of a big downdraft. Perhaps the most positive piece of this is that it's going to drag the technically driven trend followers back into the market. There's some big institutional money that's coming back in. We've already seen reports of those dollars moving in. That can actually allow these gains to hold.
Jeff, of course, your expertise knows no bounds. You can talk fundamentals, you can talk technicals, but I'm interested in the technicals at the moment because of exactly what you said here. And one thing I'm curious about is at what point do we start to see selling get triggered if the rally is purely overdone to some investors? What might that look like?
Sure. Well, we've been looking at this 5,800 level as key technical resistance. There are a lot of reasons for that: previous highs, previous lows, as well as near the 200-day moving average. Markets are pricing in a lot of optimism right now. In fact, we at LPL have been telling our clients, we've gone from peak tariffs and max uncertainty to clarity and trough tariffs. So think about that. In a very short period of time, essentially we're pricing in the best case scenario. We're on top of the wall in terms of the wall of worry that stock markets climb. And so in the very short term, we do think we need to pull back a little bit, digest these gains, and perhaps see the market be a little bit less complacent and start pricing in the risks. We've got still sticky inflation, although the CPI news was positive. We have potentially a little bit of an up move in rates, which of course can drag on stock valuations. And then these tariffs, if 10% holds, that's certainly good news overall. But if we see those tariff rates creep up to maybe 15% overall, that's not so positive. Market's pricing in a lot of good news right now.
And Jeff, my guest host, Lou, has a question for you.
Jeff, I'm a fundamentals first guy and mostly, but I do pay attention to technicals. And I'm just curious, I'm not sure if you're one of them. About a month ago, everyone was freaking out over the S&P 500 death cross, which fast forward to today and really wasn't that deadly. How do you decide what technical indicators are the most important for investors to follow? From your vantage point, what are the strongest technical indicators to follow?
To that, I would say breadth, right? And so I cited one stat in terms of the percentage of stocks above the 20-day. We also like to compare the moves to prior historical moves. And so this move actually resembles some of the really big reversals in the past. You can look at 1987. You can look at 1998. You can look at 2011, right? Probably have to take out some of these bad recessions, not very comparable. We don't think we're going to have a recession this time. But some of those big moves certainly resolved higher. Now, retests happen more often than not. Now, the retest doesn't have to go all the way back to the lows, but you see throughout history, better chance than 50-50 that we retrace a big portion of this up move. Hopefully this time the economic data and the earnings is supportive enough that we don't have to retrace even half of this move. But 17% move in about a month is a pretty big move that probably needs to be digested.
And Jeff, you talk a little bit about the idea that earnings estimates have come in just a bit because of all the macro headwinds and the uncertainty out there. What does that signal for where stocks can head going forward? Is it a good thing that those estimates have started to come in?
Yeah, that's one of the things we were looking for to signal a durable low, which now we think is probably in. Credible estimates are probably finally here, right? Somewhere in the 257 to 258 range is generally where the strategists are landing here. Now that we got the good news on China tariffs, potentially a little higher than that is in play. So, we have a bull case scenario of about 6,100, maybe a little higher than that. The odds of that certainly have gone up now that estimates have come down to a level that's credible, and the market can start pricing in some of the benefits of the tax cuts that are coming. Remember, this market's had to, essentially take its medicine. We've been saying eat vegetables of tariffs before the dessert, before the sweets come, which is deregulation and tax cuts. We're now moving into that dessert phase, and the sooner that stocks can start focusing on that, certainly the better.
Yeah, and certainly questions about what that dessert phase is going to look like in reality. Jeff, really appreciate you joining us, Jeff Buchbinder. Thank you so much.
Thanks a lot.
And we're going to get final thoughts with Lou Bazanis, who's been with me for the hour. Really appreciate it, Lou. I want to get a take from you on the extent to which you see this rally lasting.
So I think it has legs. There's a big disclaimer in here, and I'm going to say why it has legs and then go to the disclaimer. I think it has legs because Jeff was talking about it too. Earnings are very strong, right? Analysts were expecting Q1 growth of 6%. We actually right now are tracking for 12%. Later half of the year, we still have double-digit growth expectations. That's ultimately what drives stock prices. Mm-hmm. The disclaimer is, if this on-again, off-again trade war goes on again, then all bets are off because you're really going to get a system and companies that are fatigued, and you're going to start seeing these increases in price work their way into the system. Everyone's going to get tired of a 90-day pause every time there's it gets too painful. So I think that's the real threat. I don't have any confidence in anything, in terms of a deal until it's done. I've done investment banking for decades. Deals fall apart a million times before they actually get done. So we're on a good path, but I'll believe it when it's inked.
I think that is very important context for our audience, straight from the source. Lou, thank you so much for joining us for the hour. Great insights as always. Really appreciate it.